Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Pierre Debbas. He is managing partner at Romer Debbas. We're going to take a look at broker fees being banned in New York City. How's that going to impact real estate and the local economy? It's great to have you with us, as always. And when I saw this hit the news last Thursday, I thought of you guys right away. This is pretty big news for anyone who has rented. What's the impact to landlords, to brokers, to renters?
Yeah, this one took the real estate market by surprise. We've had in the last 8 to 12 months the most sweeping changes in rent regulation for New York City real estate, as well as the broker commission that just got passed earlier in the month. So the reaction in the marketplace is not good. People are very concerned with how this will have an economic impact on landlords, also tenants as well as brokers. The interesting thing is about the tenants, if you start there, everybody thinks that by having the landlord have to pay the broker's commission moving forward, it'll make New York City real estate more accessible for tenants. And the flaw in the logic is that landlords are really going to get to their bottom number, their bottom line regardless. And I can tell you now from handling a few leases in our office in the last week, all the landlords did was increase the rent to offset for the difference. The tenants weren't that concerned with it. At the end of the day, it's net the same to them. So moving forward, I don't think it's going to provide that level of accessibility that state legislatures were aiming for. I think at the end of the day, it's going to just result in increased rents.
Right, because I remember you explained to us last time you were on that with commercial leasing, landlords and the banks, they have to have a certain amount that come in order to get that lease, right? Isn't that correct?
Yeah, absolutely.
So when legislators are saying, or when the average person like I'm saying, why not make rents lower in the city so more people can afford to have storefronts and rent here? It doesn't quite work that way, though.
No, it's not a simple solution, because if you take your smaller landlords, take someone who owns an individual condominium unit and rents it out, or somebody who owns a 4 to 6 family building, their margins are rather slim. It's not as profitable as one would necessarily think. The larger landlords will be fine. The ones who own hundreds of units throughout the city or thousands of units. They'll figure it out. They have the cash flow to, withstand this added expense. So I think that you're going to start seeing the smaller landlords, we're already seeing money leave New York City as a result of all these sweeping changes. That's already taking place. And the lower the margins get, it's not as simple as just pricing is reduced. It's going to be a matter of capital leaving the city.
What happens to the brokers?
Well, what's going to happen to brokers, the interesting thing is about brokers, when you have social media and reality TV, everybody's portraying them as making exorbitant sums of money. And the Real Estate Board of New York had a great stat last week. Your average New York City broker makes $50,000 a year. Not that that's not a small sum of money, but at the end of the day, it's not the exorbitant sum of wealth that is necessarily perceived by the public.
Like billion-dollar brokers and what you see on TV.
Exactly. $50,000, they pay their own health insurance, they have no benefits, the cost of marketing, I mean, it's a lot for them to take on. So in enacting this law where the landlord has to pay for all the broker's commission, what's this going to result in? It's going to result, quite frankly, in a loss of a lot of jobs. I can only imagine the volume of brokers that will have to look for different careers. Landlords are going to use online platforms to market their properties. They're not going to use brokers in the same manner that they are now. So the online platforms may benefit from this, but at the end of the day, it'll create a loss of jobs, and it'll be, I think, in the long term, very detrimental for the market.
Yeah, this doesn't sound like it's going to help the New York economy at all, or it's not going to change anything for tenants. They're still going to be spending, if not more money, and then it's job loss.
That's the thing. Who does it benefit? When you ask really who does it benefit, I get the intent was to benefit the tenants, but I don't think that that's practical. I think the landlords are going to have an added expense. They're going to try to increase the rents to offset that. They may not, so that's a loss of income tax revenue for the state. Property values will definitely decline. That's going to be a loss of property tax revenue for the state, and jobs will be lost in the brokerage community. So I really don't see who wins at all through the passing of this law.
Do you think that there could be any reversal or an alternative to this law?
Well, right now, today exactly, there's a huge group of real estate brokers who went up to Albany to lobby with the state. And then if you go back to the rent reg changes that took place in June, the major landlords of New York State are suing the state, trying to reverse this. So there's a lot of tension in the marketplace now and a lot of lobbying and litigation. I'm hopeful that there comes some middle ground between everything that's going on. Some of this is scaled back, but at the moment I'm not optimistic, because it really seems that the state is gunning for the real estate market and the real estate community. Across the board, and it doesn't seem like there's talks right now of regulating free market tenants and free market leases. then how are they free market if they're government regulated?
What about the New York City real estate market overall? Is it declining from 2018, 2019? Has it recovered?
No, it's definitely declined. If you look at the investment sales in a multifamily market, prices have gone down about 25% since the rent reg changes were passed. Deal volume is down significantly. I don't know the exact statistic, but I can tell you in my office, the volume of multifamily deals and investment sales has plummeted. So that's certainly not good for the market. On the residential side, you're seeing a transition in terms of a correction in pricing, but the interest for investors, if you take that demographic, that's completely deteriorated, largely because people want to wait and see what's going on here. We have too many changes taking place at once, and they're of quite drastic measures. So if you're an investor, you're going to take the conservative approach and wait on the sidelines to see how this unfolds.
All right. Thank you, as always, for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global